Hey guys, how everyone's doing? I'll be with you in a little bit. If you can, just let me know how the audio's coming in. And thanks again for being here. Appreciate it. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, and this is our weekly live stream. So we appreciate that y'all could be here and join us and keep me company. Quick roll call. Let me see. VK Travelog, Mutant Ref, Pablo Pina. Full name. Good morning. Emperor Bear, Joe San Mayton. Yes, Paul speaks. He spoke at that Bay Area conference thing, so we'll break it down and we'll go through it. That'll be a bit later on. Let's see, Truth Monster, how you doing? U.S. dollar is garbage. Well, that didn't take too long, so we're right in the middle of the ball game already. Okay, Truth Monster, there you go. Seymour Rivers echoing that same sentiment. Cash is trash. Ray Dalio said it. Robert Kiyosaki said it. A lot of guys have said it. I think we're going to be hearing that more and more and more. Cash does have an expiration date. So you guys are on the ball first thing this morning. Let me see. Polynesian Pip, aloha. How you doing? Again, VK Travelog. Jack Parsons, how you doing? Oliver Twist. Oliver Twist. Not sure if I've seen your name before. Welcome aboard. If you are new, go ahead and type in new and where you from, and we'll see if we can get a acknowledgement to you. Jack Parsons, how you doing? Bay Creek History Detectives, first time I've seen you here as well. Welcome aboard. Call of the Wild. Okay, so there's some new guys and some regular guys. So glad y'all could be here. It's a good mix. Um, so again, today we're going to be going through some things Jerome Powell said, and then we're also going to be looking at a few things from last week's guest, what Alasdair Macleod had to say. And it was a pretty interesting interview. It was the first time we had a chance to speak with him. So I was really pleased with that. And again, if it is your first time here, please do go ahead and subscribe. Hit the bell to be notified on new updates and give us a thumbs up if you like what we do. We really do appreciate the thumbs up. They really help us out quite a bit. And as always, you can find us on social media. Our website is silverbullion.com.sg. We do deal in precious metals over in Singapore: gold, silver, platinum, palladium. We even have electric vehicle metals such as nickel. And but probably equally or more important is we do specialize in systemic wealth protection. So again, if you folks really understand what's going on, or maybe if you kind of sort of understand what's going on with the whole monetary system and all this money printing and everything else, uh, contact us. I mean, if you're considering, possibly storing metals or buying metals and keeping them overseas in a different jurisdiction from your home jurisdiction, go ahead and give us a call or shoot us an email, and we can go through things with you. Silver Bullion SG is our Facebook handle. Silver Bullion PL is our handle on Twitter. Audio versions, bit.ly, bit.ly, SBTV iTunes, SBTV Spotify, and Crisis Tracker. If you have the Telegram app, go ahead and join our group, crisis tracker. This is where we go ahead and we will post typically daily articles as it pertains to economy, finance, monetary system, gold, silver, things like that. So we kind of help you sift through some of the news and just kind of bring out what caught our attention, and then we pass that on to you. So again, glad you all could be here. Michael West, Call of the Wild. Glad you could be here as well. Let me see a few more names. Roll call here. Uh, American Rebel 27, Millennial Cash Flow Investor. Good one. Good handle. Bradley B. New. How you doing, Bradley? Where are you from? Moxie Gladiator. New from New York. Welcome aboard. Glad you could be here as well. Bonnie Bean, Z Driver, Matthew Bellinger, Camden. Welcome aboard. A lot of new faces. Appreciate it. Appreciate the thumbs up as well. BK Travelog. That's what it's about. Those thumbs up. So we can get those thumbs up. We appreciate that very, very, very much. Jason L, thank you. I appreciate that. Robert Rosselli, get ready for Fed coin. I would say so. Yes. I mean, I think central banks, they've been speaking about it for a while. They've been, I think, giving us a lot of time to understand what it is, and we may not know what the consequence of it may be, or the fallouts, or what it's going to do, but they've been telling us about it for a while. So there you go. Fat Vegan, how you doing? Yes, please do hit the like button. Appreciate that. Okay, so there we are. Rolf Steiner, how you doing? Dark Winter. Let's hope so. I mean, let's hope not. Let's hope not. So okay, so moving on. Our upcoming guest for next week's or this week's interview later on in the week is going to be David Morgan, Silver Guru, publisher of the Morgan Report. He's also the author of the Silver Manifesto and Second Chance: How to Make and Keep Big Money from the Coming Gold and Silver Shockwave. So we're happy that that David's coming on board. And so with that, we're going to go ahead and play our ebook giveaway, where we refer to something that our guest had said last week. And then if you're the first one to get the answer right in the minute and 30 seconds that we allow for it, you're going to win David Morgan's Silver Manifesto ebook. So it is a detailed examination of an incredibly underappreciated asset class, which is precious metals, and most notably silver. And the book takes an in-depth look at all aspects of the silver market, including but not confined to the monetary history of silver. So to have a chance to win this book, download the Kindle app from your phone or tablet's app store. It is a free app, so go ahead and download it, because it will be a Kindle ebook that you'll receive. Be the first to answer correctly in this live stream before the timer runs out. It's going to be about a minute and 30. And U.S. winners will be given a link to download the ebook. Winners outside the U.S. will be given an alternative prize at our discretion. The reason for that is because they won't send these ebook gifts outside of the U.S., so there'll have to be another prize at our discretion. And provide us an email during this live stream. So what will happen is my colleague Vincent, he's here. I hope he's here. I kind of messed up the scheduling for this. I think you noticed we're like an hour earlier. But hopefully he's here, and then he'll go ahead and get your name. So what you'll do is, or what he'll do is, he will mute your comment so only he will see it, and then you can go ahead and give us your email, and then that way we can get back in. We can get back in touch with you for your book. So moving on, let's see. We'll go ahead and we'll ask the question coming from last week's interview with Alasdair Macleod. Question is, according to Alasdair Macleod, the establishment does not like gold because it shows the inadequacies of blank blank. It's 2 words here, so think it through. 2 words. Okay, so 2 words. So it came from last week's interview with Alasdair Macleod. Gold shows the inadequacies of blank blank. So go ahead and think it through. Got a little bit over a minute left, so I'll be looking for the answers here. see who gets it right, and they'll win that ebook, or the first person who gets it right will win that ebook from David Morgan, Silver Manifesto. So, okay, so see some answers coming in. Okay, Oliver Twist, David A, VK Travelog, answering Polynesian Pip, Hidden Numis, Joe San Martin. Okay, what else is out there? Let me see. Um, full name, monetary system, Joe San Maton, banking system, Miriam Lewis. Okay, fiat currency. I guess you mean fiat currency. Okay, hang on. Okay, so that's about it. Time's up, and we're going to stop at fat vegan. We're going to stop at fat vegan. Uh, looks like Oliver Twist, you won. You were the first one to answer correct. The answer is fiat currency. So we have Oliver Twist, who's going to be getting that ebook, David Morgan Silver Manifesto, and the rest of you, VK Travel, Polynesian Pip, Hidden Numist, Miriam Lewis, and Fat Vegan, you folks will be getting the ebook of Aon Schmidt, his Build a Better Bank ebook. It's a pretty good book. But just to confirm the answer, here's Alasdair Smith in his Alasdair Macleod, sorry about that, in his words.
We know that the establishment does not like gold. It does not like gold because it shows up the inadequacies of fiat currency. So they suppress the price of gold. And we're seeing a suppression going on at the moment. The suppression will eventually fail because the only sound money basically is metallic money, which is gold and silver.
Okay, so there you go. The answer is fiat currency. Hang on, let me get to a message here. Hang on, I just need to know if my colleague Vincent was able to get the winners down. Okay, so hopefully he did. If not, I'm sure he'll chime on at some point a bit later and contact you. I have the names here: Oliver Twist, VK Travel, Polynesian Pip, Hidden Numist, Miriam Lewis, and Fat Vegan. So you folks did a great job there. Right, so let's move on to our website here, silverbullion.com.sg. We'll take a look at what's going on with silver and gold prices. Let's see here in Sing dollar. Let me switch this over to US dollars. All right, so how's it doing? Silver a bit up, 24.43 this morning. Had a pretty wild week last week. I think it even went. I'm not sure if it got down into the 23s, but I know it had a really wild week. Gold 1875. It's still gold's still having a hard time trying to hang on to that 1900 1950 level. It just can't seem to dig its claws in it and get a firm grip. Silver, it does, seems like it hits that 50-day moving average, and not too long after, you'll see it really start to, it'll start to move down a bit, work back up to that 50-day average, starts to move down a bit. For some reason, anyway, in the past few weeks, it seems to be like that. So, got to keep an eye on silver and what's really going on. Investor Kit, this is free. All you need to do is click on it on our website, silverbullion.com.sg, and then a PDF will show up, and then you'll see a lot of reasons why you should be looking at silver and gold, and possibly even, depending on your situation, if you should be or considering to store overseas. There are a lot of reasons why you would possibly want to do that if your situation allows for it. Sign up for a Star Storage account. This one's pretty important. I mean, I think it's a good idea to go ahead and sign up for it. Doesn't cost anything. There's no maintenance fee, but you never know when you may have to really start loading up on silver or gold, and possibly in a different jurisdiction. So it's good to have that storage account ready to go. Silver to gold ratio 76.8. I think we saw it as low as 75 or so, 74, 75 last week. It's still holding. I mean, despite the price movements, it's still holding that mid 70 area. So again, for those that don't know, basically this means it takes 76 ounces of silver to equal 1 ounce of gold price wise. Price wise. So what guys do is they will use this ratio as one of the indicators as to whether they should be buying silver or they should be buying gold. And right now, it still looks to be the time where we should be buying silver. So this is pretty helpful as well. So take a look at Twitter. Some bookmarks on Twitter. Twitter is it's pretty active this week too. Dr. Sandy Parwaga, U.S. housing bubble now is in the stratosphere. Thanks to loose lending, the inevitable crash will be even worse than the '08 collapse. So he threw a chart up from the Fed, and this is pretty interesting. This gray bar here towards the middle, this is the Great Recession, 2007, 2008, 2009. You can see how there was a huge amount of people buying homes, and all of a sudden it fell off the cliff, and there were a lot of mortgages that got in trouble. So this is what happened then. And if you look, what's happening now is it's just pretty much been a steep decline or incline all the way up, and we're even at a higher level than we were back then. So we're about here right now, and um, it so this can or probably will play a huge factor that has yet to start to show its head. I mean, I think we are seeing some issues with the mortgage market now, or real estate market now, where commercial real estate is seems to be going down as people leave big cities, and we're having homeowners who have maybe another property. They're kind of in a gray area as far as getting rent. So that should be a pretty interesting thing to see. Let me take a look at the Twitter one more time. Sorry, I got to pull this up. Um, okay, so that's Dr. Sandeep. David Morgan, is silver a good investment? For centuries, silver, not gold, was the precious metal of ordinary commerce. Numerous currencies, from the mark to the pound to the dollar, were defined as weights of silver. From Europe to China to the New World, silver coins were the currency of choice. Silver defined what it was to be cold, hard cash. Absolutely. Silver has been used more times than gold as money. Silver independent, the odds favor the silver bulls. This was an article from Seeking Alpha. So maybe we'll run through this real quick. Let me just go straight to that Seeking Alpha link. Silver momentum. Let me make this a bit larger. Okay, silver momentum is positive, which suggests that we're going to continue to see gains over the next year. This article came out November 19th, so it's pretty recent. Seasonality suggests that we may see the current pullback continue, but the start of 2021 will likely be very bullish. We can profit through a mechanical trading strategy to exploit silver's momentum tendency. So this article from Seeking Alpha, it's very positive on silver next year. I think a lot of us are very positive on silver next year. Now you look at this chart here, it seems you can look at almost any chart and you're going to know when March came about. All you need to do is just look for this waterfall right here. Almost every chart you look at, you're going to see this, no matter what metals chart, stocks, equities charts, whatever you look at, you're going to see this just about. That waterfall, we saw the price drop. We saw silver go down to about 10, 11, or 12, $13. And then it's been up. We saw that nice rise up to almost $30. And then we've seen it come back down. And it's been trekking sideways a bit. But still, the momentum is there. If you were to just draw a little line right there, you can see that momentum is still on the upside. So silver does still look, it's still doing its thing. It's still on the upside. So while investors may be tempted to take profits at these levels, I believe this would be a mistake. Specifically, I believe that there's a very good chance that silver is going to rally over the coming year, and that now actually is a very good time to buy the commodity. So that's coming from Seeking Alpha. Florian Groom is past guest. Um, he put out this Silver Weekly chart book. I would suggest you guys go ahead and take a look at that one. Let me see if I can pull up the link here. It's a bit lengthy, so you may want to look at it at your own leisure. So I'll put it there for you. Um, okay, so go ahead and click that link if you want to see what it's about. Okay, so moving on. Let me see what else is there. Marin Katusa Research. 21% of US dollars were printed in 2020 so far, or about 4.5 trillion. This is more than the amount of money created in the previous 5 years, yet only 5% of it is in new cash, or it's new cash in circulation. This chart is it's pretty amazing when you look at the amount that was printed. So the M2 money stock USD in trillions were it's really gone up when you look at all, I mean, throughout history, and then we have this huge spike here. 21% of all US dollars were printed in 2020. I think that's a phenomenal, just a phenomenal amount. Goldman Sachs, commodities poised for bull market. So they're coming out again, looking at things like silver, looking at things like gold. And this one also, to the moon. And it's not Bitcoin, it's not gold, it's not silver, nor any other asset. What's going to the moon? It's the U.S. national debt. U.S. national debt. I mean, you look at this right here, and the amazing thing here is you look at this arrow on the bottom that represents early 70s. And we all know what happened. 71, Nixon closed the gold window. We were relatively flat here. And as soon as gold was gone, politicians were free to print, governments were free to print, and print they did. They didn't have that gold link anymore. They could print as much as they want, and they did. They printed as much as they wanted. They took on as much debt as they wanted. I mean, if you can print the currency to pay the debt, you're going to take on as much debt as you please, and it's exactly what happened. Where you can really see it just to the moon, and it's not an asset. It's U.S. national debt. I think that's a great chart from Tiffany at Goldilocks. She's been really great to follow. Um, Max Kaiser insane. Anything you hold outside of Bitcoin and gold is in trouble, or going to be in trouble. I guess is his perspective. And this is a chart from Tavi Costa where if you look at the first wave, you look at the second wave, they look pretty similar. So I guess the expectation or the possibility of another spike upwards. And if you look at it, 4 to 7, I think this should be balance sheet should be trillion. It's gonna, I guess you could really have a. You're going to see the same vertical movement once again, and that this is what they're looking at here. So uh, it's kind of eerie to see this, playing out again. Here you were first wave, here you were second wave. It doesn't mean it's going to happen, but it's saying that things are set up where it's a possibility again. So here you go, Tavi Costa doing his work. Let's see if there's anything else out here. Okay, I think that's it really. Let's see. Stimulus checks are going to be something to see what happens with these when once everything settles down politically. And Judy Sheldon, she didn't get in. She got rejected just the other week. It looked like she had a good chance, but that just didn't happen. So having said that, let's get back to the program here. Yeah, Trump never hired her. He was her she was his choice or nominee of sorts to get on the Fed, be one of the Fed governors. So it I think a lot of people had a lot of hope because she's seemingly maybe not necessarily a gold bug, but she understands the role that gold has to play. So let me check on something here again. Um, okay. Yeah, Vincent, if you can just go ahead and let me know if you got the names. If not, I'll go ahead and read them out to you again for the ebook. Okay. So moving forward, I want to go back and revisit a few things last week's guest, Alasdair Macleod, said, and maybe we'll start up a little discussion. So we'll go forward with two or three things that he said.
We will do infinite QE, whatever it takes. So now there's something about QE which people have got to understand. The idea that QE creates government debt is actually completely wrong. Because what's happening is, the debt is the mechanism whereby the money is created. But actually, what happens is that the debt is issued into the market. It is then bought back by the central bank at a pre-agreed price and resides on the central bank's balance sheet. In return for that, the central bank pushes an equal quantity of money into the economy, or more correctly, into the reserve accounts of the banks on its own balance sheet. So that's how it sort of balances out. But the idea that this is debt is completely wrong, because it is owned by the government itself through its central bank. It is not owned by the public in any way. The debt is owed by the government to itself. So it actually really doesn't matter. But what really does matter is that it has created the money which is injected into the economy and debased the earnings and the savings and everything else of everybody in the economy.
Okay, there you go, Alasdair Macleod. What he's saying is infinite QE. There's going to be infinite QE. The chart we showed from Tavi Costa, it sure looks like it could be set up for infinite QE. With what's going on with the bug, sure looks like it could be set up for infinite QE. So he makes a great point there. QE is not about creating government debt. That one caught me a bit by surprise because QE essentially puts you into debt. And he says debt is the mechanism to create money, which is true. We're a debt-based monetary system. Money is created from debt. There needs to be debt to create new money. Debt is owned by the government through its central bank. That part is true, and I always felt it was going to be on the taxpayers' back. I still believe it is going to be on the taxpayers' back. And this is one part of it where QE debases the earnings of savings of everybody. And in part, it is through inflation. QE is debasement. It's debasement. Past guests have said it's even counterfeit. And so, again, if you hold a lot of assets in fiat currencies, you're getting debased. With the money printing going on right now, your money is being debased right now. It's not like the old Roman times where they would take out some gold and slip in some copper or some brass. That was debasement then. Today, debasement is just adding in a whole lot of keystrokes into accounts all over the world, and that's debasement for 2020. It's centuries into the future. That's the debasement. So going forward, let me take a look at a few comments, and then we'll go play another clip from Alasdair Macleod. Let's see. John Michael Karma. Absolutely, more debt does not mean the debt will be paid. That is true. That's true right there. Let me see what else is out there. Okay. Moxie Gladiator, Monopoly Money. It's sad that we laugh when we say these things, but it's really getting to the point already. And again, for guys who hold gold and silver, you understand why. For other people who are on the fence, still trying to decide what to do, it's one of the reasons. This debasement, this counterfeit, this debasement that's going on. So I'll play another clip from Alasdair Macleod.
At the end of the day, replacing taxes, which you cannot get in sufficiently to cover your spending, the government spending, with printing money. And, the idea that you just print money and it doesn't harm anybody is, self-evidently, if you believe in that, you believe in perpetual motion. It's just not true. So this has now become a means of government financing. And if we look at since March, that important moment, the 23rd, when suddenly everything took off, and it took off because the Fed said, don't worry, we'll put however much money into the system as is required through QE. So the S&P took off.
Okay, so Alasdair continues on and he says QE covers insufficient tax collection. That was a point I never looked at it from that point of view. So when he said that again, that was another eye opener that Alasdair shared. So I appreciate his viewpoint there. QE has become a means of government financing. Um, Again, yeah, it is. I guess you could say that. I mean, if governments are not taking in enough taxes or not enough people are working, it's could it be? Could it be another way where government is supporting themselves? Central bank to the rescue. Um, we're going to get in that in a bit because Powell he has all of these powers. He has all of these powers, but there was something that came out later in the week where some of those powers may be stripped. So we're gonna get into that in a bit. Let me see. So
I myself always wondered,
another
okay, if you
clip.
have a set
Another clip.
amount of Bitcoin, once that last Bitcoin is mined, how does it account for all the products in the world, the goods and services, the population of people, all the things we need? That currency supply can't expand, it can't contract. So how can you account?
Yeah, I mean, um, I think, the point about gold is if you look at the accumulation of above ground gold, it accumulates at roughly the rate of the growth of the global population. Now, this is important because it means that gold broadly keeps in line with the economic demands that are placed on it as money. As you rightly point out, this is not true in the case of Bitcoin, which I think in 2024 or something, that's it, finish, or that's as intended. It's wonderful if you're a bull of Bitcoin, sort of thinking, well, this means it's going to go on up forever. But in order for that to happen, it actually has to, after fiat currencies go, it has to actually operate as money. And I've just explained why that cannot happen. So I think a Bitcoin's bull's hope is the death of paper currency takes a long time to come about. And the longer it takes, the higher up, the Bitcoins and the Ethereums of this world can actually go in terms of value. Meanwhile, they do operate as a store of value, which is absolutely fine. But the point I'm making is the moment fiat currency dies, then cryptocurrencies will die with it.
Okay, so another different point of view. Alasdair says accumulation of above ground gold roughly grows with the population, and I think it is true that money supplies need to expand and contract with the economy. Gold broadly keeps in line with the economic demands. Bitcoin cannot expand and contract with the economy. Cryptos will die with fiat. Some of his points of views. And when I had asked him that question about Bitcoin once the last Bitcoin is mined, what I meant is, let's say if people speculate Bitcoin will be money, should be money. So what I'm saying is once that last Bitcoin is mined, that's your total money supply. And that money supply has to account for everything in the world, every donut, every home, whatever it is, it has to account for every single thing in the world. So my question really was, let's just keep the numbers simple. If there's 100 homes that were built or in existence, and all the Bitcoin has been mined, that's it. That's it. There's not going to be any more. What happens when the 101st home is built, the 102nd home is built, the 200th home is built? What happens? Well, if all the Bitcoin is mined and you can't have any more, I would suspect the price of your home has to go down in order to account for another home that's coming up. And so this is where I have a hard time understanding the concept of a total monetary supply that's not going to grow anymore, but yet people want it to be money. Well, how do you account for all the products and services that are going to come about from a population that is going to expand and a population that's going to need more homes, more goods, more services, more products? So that was really my question. And, it's not a knock on Bitcoin. It's just something I haven't really heard a convincing argument to explain to me how a finite monetary supply is supposed to be money if you can't expand or contract in some way. So I just simply haven't heard a convincing excuse for me, which is why I had asked Alistair about it. So let me take a look at some of the comments. Yeah, if you keep going down in decimals, that means, eventually it's going to be worth less and less and less, and eventually you're not going to want to produce anything because it's not worth it. You can't. You're expanding by going negative, by taking things to a smaller and smaller and smaller and smaller number, which means things are going to be valued a bit less and less and less and less. So again, for me, it's not really a convincing argument, because if you started off where your house was 1 Bitcoin, and then another house came up and now your house is going to be worth point 0.7 Bitcoin. I mean, I'm not seeing it. Your house is just worth more Bitcoin. I mean, wasn't it? Shouldn't it be? So I mean, I could be wrong, but my point is, if you do this large scale, how really are you going to account and let things hold value anymore when the value keeps going further and further into decimals? So I mean, I could be wrong, but I'm not really. I personally, I'm having a hard time, really trying to understand that, because it's the way it's going backwards. So I'm not saying I'm right. I could be wrong, but it was just something that I'm looking, for a convincing argument, and I'm open. I'm open to it. I do know that I don't think Bitcoin's going to go away. It's been doing well. I think it is a form of money. It has some qualities of money that people want. So I do think there's something there. There's a lot there still. But I think a gold backed crypto, or something that has something backing it, maybe a bit, uh, for my preferences, a bit better. I mean, I think it should have some type of backing. Otherwise, fiat currency doesn't have any backing. What's the difference? Bitcoin doesn't have any backing, and if you're just going to go, 0.00010000, if you just keep doing that, it's like money printing all over again, unbacked money printing. So you know, I'm still open to a convincing argument there, but I don't want to start a Bitcoin type of a Bitcoin deal. I do think it has a place. Okay, that's my position. I do think it has a place though. So moving on, before I start to get in trouble with everybody, everybody here, I want to go ahead and take a look at a few things that Jerome Powell said. And he spoke at the Bay Area Council Business Hall of Fame. This is an event, and you may have seen your Twitter feed going off with some of the things that he said. And for others, maybe you didn't. Maybe you didn't see what he had to say. So what I'll do is I'll run through, I think there's 5 or 6 clips of things that Jerome Powell had to say from this virtual event. So here's the first clip.
COVID these days, across the country, we're seeing new cases, we're seeing hospitalization rise, and we're seeing states begin to impose some activity restrictions. Up to about 15 states have done so. And, the concern is that people will lose confidence in efforts to control the pandemic, and they'll pull back from activities that they think might put them at risk of infection. And there are some signs of that already. So, yeah, this is very much a concern. And we've been saying all along, the economy can't fully recover until people are confident that it's safe to resume activities involving crowds of people. I ought to mention the vaccine, of course, in this spirit. So the vaccine news is certainly good news, particularly in the medium term.
Okay, a bit choppy there. But this is something we touched on pretty early on, where you cannot have a healthy economy unless you have a healthy people. We need healthy people. That's one part of the equation for a healthy economy. And where I was wrong when I looked at this way back then was that I was thinking the population had to be healthy physically. We needed to be physically healthy. And what even I learned over this was that you also have to be mentally healthy as well. And what I mean is, a lot of people, and rightfully so, still uh,
trying to wrap their head around what's going on. Some doctors say this, some doctors say that, some governments say this, some governments say that. So mentally, it's it's pretty taxing on the population where we're not sure which way to go. And that was something I didn't really see at that time. I just was only looking at the physicality, of people being healthy in order to bring up to get the economy healthy. I didn't realize a lot of it. It's also the mentality. So taking a step back and looking at it, it was something that you know I I didn't consider as well. So that's important. So another clip from Jerome Powell.
I ought to mention the vaccine, of course, in this spirit. So the vaccine news is certainly good news, particularly in the medium term. In the near term, there are significant challenges and uncertainties: the timing, the production, distribution, the efficacy for different groups, and even in the best case, widespread vaccination is months into the future. And with the virus now spreading at a fast rate, the next few months may be very challenging. So it's probably too soon to say with any confidence what the impact on the path of the economy will be from the vaccines. Although, of course, they're going to turn out to be bad news when they are broadly available.
Okay, so best case scenario, Jerome Powell is saying the vaccines are months into the future, and months into the future, and then you have to imagine how much longer before things actually start to gain traction and we get to be to where we were. It's a long time. It's still going to be a long time. Currently, with the virus spreading, it'll be very challenging, and he has a point there. Again, I think the way it's working on people mentally, it's a burden. It's a huge burden. People aren't sure what to do. And then again, people they tie in things like freedoms with these things. So it's not an easy thing right now for people to decide what to do, what's the correct thing to do. And you are hearing things both ways. So you really gotta try and sort it out as best you can with whatever information you can get. And he also says you cannot confidently, or he cannot confidently tell you what the impact vaccines will have on the economy. Now, I'm not sure if he's saying this thing is going to work or not, um, but I would think he would be more positive, where once the vaccines are there, people will go back to work, economy will start rolling. But instead, he holds a neutral ground where he says he cannot confidently tell you what the impact vaccines will have on the economy. So I found that a bit odd, where he took that kind of a neutral position, where if anything, I would think he'd really have a positive stance there. So let me go ahead and take a look at a few more of the comments here. Let's see what's going on with the conversations here. Um, let's see, Robert Rosselli. Yeah, I've been hearing about this. PayPal is buying up Bitcoin. Been hearing about it. So again, Bitcoin, I don't think it's going anywhere. It's here. Whether or not if it's going to be the money of the future, hard to say. Hard to say, because again, if that's the case, why are central banks creating central bank digital currencies? So I mean, there's always a tug and a pull to these things, and we're always stuck in the middle trying to figure out which side of the line we need to straddle or position ourselves on. But again, we've got to keep an open mind to Bitcoin, especially us gold and silver guys. We tend not to like it, maybe because we don't understand it. But it just seems to be that's where things are pointed in a cryptocurrency type of direction. Let's see what else is out here. Let me see. Let me just scroll through this real quick. Bloodbath McGrath, increasing power of government. That is true. I think we can go back to the Dr. Mark Faber interview, where he says governments, they're going to do everything they can to stay in control, stay in power. Um, that's their job, I suppose. But we also have the power of who we want in government. Let's just hope that that's something that always stays. Okay, so we gotta always keep up with what's going on, and it's not easy. Not easy. Let's see. Porky Pig Pantalones, what a name. PayPal purchased 70% of all mined Bitcoin since they started trading it. Okay, I didn't know the number. That number was 70 already. Okay, it's good to know. It's good to know. Let's see what else is out there. Yes, Fat Vegan. That's some great advice. Hit the like button. We appreciate that. That really helps us out a lot. Um, let's see. Okay, moving on. Um, okay, maybe this might convince me. I understand what Alasdair is saying. For example, in purchasing a house, if you need less Bitcoin, it's not the valuation of Bitcoin, it's increased purchasing power, like using less gold. Um, I see that side of that balance, but I think real world, put it this way, I think real world, we we tend to think, things are going to work out nicely this way, that way, this way, that way. And then once it gets going in the real world, it doesn't work out how we thought it would. And I think that's really my part of my hesitation with all this whole if people want it to be a monetary supply that cannot expand when it may need to expand or contract. Um, I just think it needs because of the population. Population is going to grow, so I think goods and services are going to grow. The money needs to grow, and the money is growing by going backwards into decimal form. So on paper, I think it works, but in theory, I'm not. I'm just not quite sold yet on that. But guys are making money, so who am I to say anything? So you've been making money, good on you. A few more comments. In fact, let me just go play another clip from Jerome Powell.
I'll mention one more thing, if I may, Alex, and that is from the very start, we've been concerned about longer run damage to the productive capacity of the economy. And what that looks like is workers who are out of work for long periods of time. They may lose their contact with the labor market. They may lose their skills. And the evidence is strong that if you're out of work for a long time, it may be hard to get back the life that you had, get back to the work that you had. For families in particular, particularly women, leaving the workforce in big numbers now as children stay home. We're seeing that. And so you could see women who, not by preference, but by requirement, are at home and their careers may be hurt. And for businesses, something like this can lead to unnecessary insolvencies. And there are always going to be insolvencies, but there could be more than, and that would be tragic particularly for smaller businesses, which may have taken generations to build. So we got a long way to go. The last thing I'll say is we're not going back to the same economy. We're going back to a different economy, and we can talk more about that. But this economy will be different, and that's going to mean that those people who worked in the service industry, they may need help and support for a time as they find work in new places. So the Fed will stay here and be strongly committed to using all of our tools to support the recovery for as long as it takes until the job is well and truly done.
Okay, so he said quite a few interesting things there. Workers who have been out of work for a long time, they'll find it difficult to reconnect. That is true. I think if any of us have been out of work for a while, sure, you go ahead, you get your unemployment and everything. It may seem nice for the first week or two, but after that, you realize, hey, I just want to work. You want to get to work. But your connections, your connections may not be there anymore, and it's really hard to try and reconnect, or it's really hard to just even establish brand new connections with people. That is a real difficulty when it comes to trying to get people back into the workforce. And these same workers, of course, are going to be rusty, out of work shape. I think, if you've been out of work and once you start working again, you realize, hey, there's some rust on you and you're not in work shape. It takes a little while to get into work shape. So again, these things take a bit of time. Even if everything opened up tomorrow, it all takes time for things to get moving again. Women left the workforce to take care of children. And this is another topic. If, let's say, kids homeschool, or again, the bug has really worn people down mentally, and understandably so. A parent may not want to send their kid to school. They're going to school their kid. And what happens to mom? Does mom go back to her career, or does she stay home with her children and homeschool them? Or does dad stay home and homeschool his children. So in other words, where you may have had two parents working, one might now be permanently, I suppose, out of the workforce, where because of the mental strain of not being sure what to do, send their children to school or keep their children home. uh, you may see a lot of people perhaps not ever enter the workforce again in order to take care of their kids' education. So again, this it's another thing that we're going to see unfold, and how it unfolds, nobody's really quite sure yet. Businesses had to unnecessarily close through no fault of their own, and we've seen this, right? I mean, bug came in, businesses had to shut down. Wasn't their fault, but what what can they do? They're not allowed to open up again. And some of these were generationally family owned businesses. It was there from great grandfather to dad to you, and generations of what sustained your family, or family through generations, may not be there anymore. So now, where do you go? You were on the employer side, and now you may have to go on the employee side. Your connections just might not be there. It's a whole new ball game. It's can be unnerving for a lot of people, and when you have the Fed head Jerome Powell saying, we're not going back to the old economy, uh, that's concerning. What kind of economy are we going into? He seems to be talking more about service industry jobs, but they roll over into other sectors as well. So again, how is this thing going to unfold? Uh, no one's sure. I don't think anyone really has a good grasp of what's going to happen. And again, these are reasons why you want to move into things like gold and silver, if you can, when you can, because you want to be able to store some of that wealth with the money printing that's going on, the inflation that the Fed is going after. If you're holding fiat, it's going to become worth less and less and less. So you need to find other vehicles to store your wealth. What else did he say? We're not going back to the same economy. We're going to a different economy. It's going to be interesting to see what this new economy is. And service industry workers will need help. Fed will be here as long as it takes until the job is done. And this is why I say, when economists say the word recovery, um, it's it's not necessarily a recovery in a true sense. It's more Fed is injecting, and it's just basically trying to reinflate that balloon again. So I don't know if you could call it a recovery in that sense. So anyway, let me take a look at comments, a few comments here. Um, let's see. Spock Talk, absolutely. You need to understand the difference between currency and money. That is true. Uh, Even myself, I tend to use it kind of loosely, but yes, there is a difference between currency and money. Robert Kaplan, Klaus Schwab wants to make a uniform socialist economy. Klaus Schwab, World Economic Council, I believe he's at. I'll play a short clip on him later on towards the end. And we're hearing more and more about the word reset. We're hearing that word more and more. And so we'll just lightly touch on that in a while. Uh, Ralph Steiner, you'll own nothing and you'll be happy. Um, I shouldn't be laughing at that, but that is it's a scary thought out there. And again, I mean, if you worked hard for what you have, it's you deserve to own it, to keep it, right? I mean, you've worked for it. So anyway, let's move on and see what else Jerome Powell has to say.
Monetary policy and fiscal policy work in very different ways, as I'll talk about in a second. And in a severe downturn, ideally, they would both be deployed to support the recovery, complementing one another, and together providing broad support of different kinds for the economy. And so far, I would say both have been deployed quite aggressively, and the faster than expected recovery that we've seen, reflects that fact. And I would also add that there's such a long way to go to get back to full employment, to get back, frankly, to something close to the economy or akin to the economy we had just back in February. It's a long way to go, and I think it's likely the economy will continue to need support from both monetary policy and fiscal policy. So it's essentially what our tools allow us to do is to stimulate aggregate demand by lowering interest rates and also to support the flow of credit in the economy. These are really important powers. They're very strong powers, and we've used them historically in historically aggressive ways, and appropriately so. And as I mentioned earlier, we're going to do so until the job is done. But this is far from a traditional economic downturn. Suddenly, in March and April, tens of millions of people were suddenly unemployed because effectively a natural disaster happened and forced a lockdown of certain parts of the economy. And as I mentioned, the burdens fell particularly on those least able to bear them. So beyond monetary policy, what fiscal policy can do is it can provide, this is taxing and spending, can provide direct targeted income support for groups that really need it. And there hasn't been a bigger need for it in a long, long time here. And those powers to tax and spend are strictly the province of our elected representatives in Congress. They get to decide who bears the costs and who gets the benefits of those things. And it's essential in our system that it be elected representatives who do so. And in the CARES Act and a couple other bills they passed, this is the largest and fastest response to any downturn since the Great Depression. It was quite large.
Okay. Jerome Powell continues on to say, long way to go until full employment. And we touched on that, right? Even if there were a vaccine tomorrow, trying to reestablish networks, trying to learn new jobs, trying to shake off the rust, trying to get back into work shape. What happens with the kids? Do we homeschool? Do we send them back to public school, private school? It's not easy. And these questions they don't have answers that come overnight. So again, long way to go until full employment. Economy will continue to need monetary and fiscal support. Again, this is why when you hear that word recovery, recovery sort of means you can take the training wheels off and that bicycle goes. You don't need those training wheels anymore. But right now the economy still has those training wheels on it, and it doesn't look to be coming off anytime soon. And that's just in a simple way how I look at it. Recovery means training wheels come off and you can go on your own. No recovery, it just means the training wheels are still on. That's just a simple way again. We can do what our tools allow us to do. And the key word I got from there was allow. So in other words, the Fed has to be allowed to do something, right? They have their mandate, price stability, maximum employment. It's supposed to be their mandate. That's the area they're supposed to stay in. So they have to be allowed to do things. Who allows them? It's Congress. Congress allows them. And we'll touch on that also in a little bit more towards the end. And this is not a traditional economic downturn. That is true. None of us have seen this in our lifetime, especially with a fiat unbacked monetary, debt-based monetary system. So that is true. We haven't seen anything like this. It's not a traditional economic downturn. Monetary policy or the government can target where income is needed. That kind of, I understand what he's saying, but it kind of opens up a can of worms because some people are going to get some things and some people are not. And Congress will look for who to tax and where or who to spend those taxes on. And so again, it's got to think this one through, right? And then he praises CARES. And my question about that was, what about PPP? Because PPP, there was some news about PPP. In fact, let me see if I can pull this up. PPP hasn't been doing well. There's been quite a bit of fraud with it. Let me see if I can make this a bit larger so you all can see it. Okay. Okay, so hundreds of companies that got PPP loans have gone bankrupt. Again, this was supposed to help companies keep employees employed and on the payroll, but yet they've gone bankrupt. And there's been a few reasons why. Okay, so we'll just get through the article here. This is November 18th, 2020. So he goes on to say that recipients of PPP loans have filed for bankruptcy after the money ran out. So they weren't trying to save their business. It was more about using it up and then letting the business go. So at least $500 million in PPP loans won't be repaid. So hundreds of companies employing 23,400 people went bankrupt after the triple P loans ran out. The total number of companies that failed despite getting triple P loans is likely far higher. The journal only analyzed the big borrowers from the program, which accounted for about half of the overall loans through only about 13.5, although only about 13.5% of the total participants. And many small businesses simply liquidate when they run out of cash rather than file for bankruptcy. SBA has only released data on the largest borrowers, which the journal linked to bankruptcy filings. So about half a trillion, let's just say, 525 billion in loans were distributed to over 5 million companies between April 3rd and August 8th. 285 medium-sized companies at least went under. Undoubtedly, thousands of smaller companies did as well. And he goes on to say that it's a program that was fatally flawed. I never understood giving money to corporations so they could pay workers. The workers were covered by state unemployment insurance plus pandemic assistance. Many people made more money being unemployed than they did working thanks to $600 in weekly pandemic assistance checks. Moreover, the program was fertile grounds for fraud. Many companies opened businesses to take advantage of the guarantee, and we're starting to hear more and more of these things that happen. Evidence of triple P fraud mounts. The Small Business Administration Inspector General, an arm of the agency that administers triple P, said last month there were strong indicators of widespread potential abuse and fraud with the program. The watchdog counted tens of thousands of companies that received triple P loans for which they appear to have been ineligible, such as corporations created after the pandemic began, businesses that exceeded workforce size limits, generally 500 or fewer, or those listed in a federal do not pay database because they already owe money to taxpayers. Several hundred triple P related investigations have been opened involving nearly 500 suspects and hundreds of millions of dollars of loans, according to the FBI. Some Democratic lawmakers and others have voiced concerns that the SBA's refusal to release the names of all borrowers would make detecting fraud more difficult. I'll just read this last paragraph here. That issue might have been resolved last week, however, when a federal judge sided with news organizations, including Dow Jones, publisher Wall Street Journal, that argued SBA was legally required to disclose the borrowers. So we may see what was going on. But kind of on the flip side, this news, not sure what to, this is incredible here, where Deutsche Bank proposes a 5% tax for people still working from home after the pandemic. So on one side, maybe there's fraud going on in triple P. On the other side, guys, they're having to work from home for whatever reasons. And this bank is proposing that they pay a 5% tax if they want to work at home after the pandemic. Incredible that they would say this. Key points. They found more than half of workers wanted to continue working from home for the 2 to 3 days a week after the pandemic. According to DB Research report, a 5% tax rate on those days on the average salary of a remote worker could raise $48 billion a year in the U.S. And other amounts in UK and Germany here. And it goes on to say this would cover the cost of grants for people who cannot work from home and are on lower incomes. So here you go. It's already taking for one set of the population and it's going to give to another set of the population. And this is coming from a bank. So this research team proposed people pay 5% for the privilege of working from home if they continue to do so after the pandemic. I think there's a clip here. Let me switch tabs here and I'll go ahead and play this clip. It kind of starts from here. So let's have a listen.
Here's another story that we're tracking for you tonight on the outbreak. A research team at Deutsche Bank is proposing a 5% tax on people who want to continue to work from home post-pandemic. Researchers justify the tax because those working from home are saving money on things like commutes, eating out, work clothes, dry cleaning. They are contributing less to the economies of the cities they work in. They say tax proceeds could reach about $48 billion a year in the U.S. and could help subsidize those who cannot work from home or those making less because of COVID. Tim, when we were discussing this on our midday call, you're the one who came up with, what was it, WFH, WTF?
Yeah, well, that is my response, and this is a family show, so let's just use those initials and people know what they stand for. This is outrageous, and talk about first of all, this is a Marxist assessment of how people should react to changing conditions. But also, hey, how about a reallocation of wealth from the commercial real estate industry? Like I'm paying $20 for a cheeseburger at lunch when I work in an office because the office spaces are so expensive that someone else is making money on. So this whole thing is so absurd. The fact that we could be living cheaper and reallocating our monthly wallet in a different capacity and actually not having to spend, I mean, how about a $20 cab ride or a subway ride in infrastructure that isn't supported anyway by the government? Don't get me started. I mean, this is outrageous. And I realize Deutsche Bank is a European bank. And so maybe some of this is the guaranteed income dynamic at work here. But I think this is an awful idea. Sorry.
I was wondering when somebody was going to bring up Deutsche Bank being a European bank, and no surprise it's coming from a European bank. Guy, it's interesting because companies have already said that they're going to reduce their, some of the companies are going to reduce their footprint in terms of real estate. They're going to reduce salaries for workers who do choose to work at home. The cost savings are not only borne by the workers. I mean, if you are going to start thinking about taxing somebody for saving money, it's not just the workers here, for sure.
Yeah, proper decorum prohibits me from using the words I would like to use to describe Deutsche Bank's idea. I think you can understand it. And you actually mentioned a few in the opening monologue, which I actually was amazed by that you actually used the initials. But with that said, I mean, maybe Deutsche Bank should take into consideration the lack of traffic on our roads and the lack of stress it's going to put on our infrastructure. Maybe I should get a rebate because I'm not going in and out of the Lincoln Tunnel every day. Or maybe Deutsche Bank should just focus on Deutsche Bank. And but for this story, we wouldn't be talking about Deutsche Bank. So maybe that was their end goal at the end of the day anyway.
Okay, I'll stop this. So I think we kind of get the gist of this story, right? Kind of amazing where, you work from home. Maybe you save a little not having to drive, take a cab to work every day here and there. Maybe you save a little because you're not going to a canteen around the area you work or eateries around the area you work. But does that mean, government should then reach into your pockets and say, hey, we think you normally would spend this much if you went to work every day. So we're going to take X amount from you and put it back into the system for whatever else we see necessary. I'm not really buying that. I'm wondering what you folks think about this. So anyway, let me just look through a few of the comments here. Let's see. Sorry, you guys got pretty interesting conversations going on here. Moxie Gladiator, to help recover the cost of operating the business. Well, I mean, I'm sorry, I may not have this in context, but I think the government's doing more than enough right now, buying up corporate debt, whatever it is, corporate bonds, I should say. I think there's many spigots of currency for businesses to get. It's not a one-size-fits-all type of a deal, but I think to then go ahead and reach in the employees' pockets, that's a bit different. So, I mean, I guess, that's why I just throw that up there where on one hand, yes, you had people lying to or frauding the triple P and taking that money, taking a run. And then on the other half, you got where, these proposals are coming out where they should go ahead and reach into your pocket since they're not showing up in the office. Let's cut their salary or let's reach into their pocket and make them pay 5% more in taxes. Pretty incredible. Two more clips, Jerome Powell.
The question with fiscal policy is, have you done too much? And is that going to put us on a path to an unsustainable fiscal path? The truth is, we're already on one. It's not an emergency. The way you get back on a sustainable path is you have the economy growing faster than the debt for a long period of time. That's what a successful program looks like. And we will go to work on that when the economy is ready for it, I would hope, in a perfect world. And that's the way that'll work. In terms of what we do, we use our emergency tools. So we have particular tools, the lending tools that we've used to lend to state and local governments and non-financial businesses and others. Those are all available with the permission of the Secretary of the Treasury under unusual and exigent circumstances, which means in an emergency. So we're using them. When the time comes, we'll put those tools away. And no one wants the Federal Reserve to take over the function of private lending in the economy. These tools are only available when the private lending markets break down, and they did in March and April. So we came in, and the markets have reopened, and when the right time comes, and I don't think that time is yet or very soon, we'll put those tools away, as I've said. So, and there shouldn't be any long-term effects of that. I don't think.
Okay. So he's straight up. He's straight up when he says this. We are already on an unsustainable fiscal path. We're already on it. To get on a sustainable path, we need the economy to grow faster than the debt for a long period of time. So we're far away. We are very far away. We are using our tools, basically money printing, to get there, and then we'll put away our tools. So this is interesting what he says, because we'll play something related to this in a bit. No one wants the Fed to take over private lending. We'll see. I think there are people that do want the Fed to take over private lending, but we'll see how this rolls out. Recovery is neither yet or soon, and there should not be any long-term effects. This last one kind of puzzles me. There should not be any long-term effects. Look, we live day to day, correct? My tomorrow is coming up in a few hours. Your tomorrow is coming up in a few hours. There shouldn't be any long-term effects. Well, thing is, there's a lot of hours, a lot of days before that long-term takes over. We have to get from here to there, and it doesn't look like it's going to be an easy thing. So, when he comes out and says there shouldn't be any long-term effects, well, how about the day-to-day? Because people are being affected, businesses are being affected, investors are being affected. We all have to try and decide what we're going to do to get to that long-term notion that Mr. Powell is talking about. We live day to day. It's as simple as that, hour by hour, day to day, and we have to get from here to there. And there's a lot of decisions that come up in between, a lot of things we go through in between. So when he says there shouldn't be any long-term effects, I'd put back, I'd place back on him. Well, what about day to day? What about day to day? Because we're all going through it, right? Again, moms, dads, guys, just trying to find work, just trying to make money. Investors who are, who understand what's going on with the system, fiat currencies and whatnot, trying to decide where to put it. And yet the Fed is blowing up the markets, pumping up the markets, I should say, not blowing up. They're pumping up the markets. Then you do hear pundits saying we have a recovery. It's just training wheels. Those training wheels are not going to come off anytime soon. So as an investor, what do you do? Where do you put your money? Mom and dad, what do you do? It's really an important thing. It's day to day, not long term. So, I think we got to kind of back up on that a bit. Last clip from Jay Powell.
Over the past few decades, there's been discussion of that. People have thought maybe SDRs, which are associated with the IMF, or the euro or the renminbi, would challenge the dollar's role. It hasn't happened. The role of the dollar as a reserve currency, financing currency, invoicing currency around the world just hasn't changed over the last couple of years ago. Our dollar markets, treasury and currency markets, are the deepest and most liquid in the world. More than that, though, to be the reserve currency, if you look at our dynamic economy and financial system, look at our open capital markets, our strong democratic institutions, including an independent Federal Reserve, those are the things that really make the dollar a safe and reliable currency. And as long as those things remain true, as long as we're that country with those institutions, and then the world will choose to see the dollar as a leading reserve currency, or currently really by far the leading reserve currency. Of course, if you look through history, different currencies, it tends to be a persistent role, but it's not permanent. We have to be those things to continue to warrant that status.
Okay, again, a few more interesting things he said. SDRs, euros, no other currency runs as deep, none as liquid. That may be true. That may be true. And then he says this: as long as the U.S. has strong democratic institutions and an independent Federal Reserve, the world will continue to choose the U.S. dollar as the leading or world's reserve currency. We got to break this part down, right? I mean, as long as the U.S., as long as the U.S. has strong democratic institutions, with what's going on right now within the U.S., I mean, I think the world will agree with this. Everyone would agree, more or less, with what's going on right now. It is not showing a strong democratic institution. It's with what's going on, there's more questions than strength. The way I see it. Being again from the U.S., but now I'm on the outside looking in. There's more questions than a show of strength right now. So that again is another thing that puts the dollar as the world's reserve currency in a bit of jeopardy, because countries do see this. They see a little bit of instability. They see the money printing going on. They see these things, and they're not so convinced that maybe the U.S. dollar should remain the world's reserve currency. But Powell, on the other hand, he says, as long as we have strong democratic institutions and an independent Federal Reserve, that independent part, it's something that we always hear, but I think, presidents, the Federal Reserve typically seems to be in the back pocket of a president. So they may claim independence, but it seems like they will also go along with what presidents want. So it sounds nice, independent Federal Reserve, but I think people see that they're joined at the hip. Government and the Fed is sort of joined at the hip. People see it, and that strong democratic institution, it's not as strong as it could be, should be. So that strength it's just not there, at least right now. So again, these are things that will cause people to want to move away from the dollar. And history does tell us reserve currencies are not a permanent role, and that's the whole thing about it. No currency stays the world's reserve currency forever. So there is going to come a time when that U.S. dollar is not going to be the world's reserve currency. Is some other currency going to replace it, or a basket of currencies going to replace it? Hard to say. But what is known is that it won't remain the reserve currency ever. So, there's truth in that. There's truth in that. And, again, with what's going on, of course, we hope things absolutely do get better, but there's just a lot of instability right now. And it's going to cause guys to start to move away from U.S. dollar. And the movement was already there. I'm just not sure if maybe this might speed things up a little. But as always, let's hope for the best for everyone, right? Let's just hope for the best for everyone. Taking a look at some of the comments here. Let's see. Jay sorry, got you. That's a nice last name. Buy precious metals is a safe bet when basket of currency likely. It could be a basket of currencies. And I mean, even when you look at the SDR, what's in their basket of currency, you find gold. There is precious metals even in that basket of currencies, so to say. So, I mean, precious metals, they have a role to play monetarily, or they have a role to play where they store the wealth of your money. Either way, they have a role, which is why it's a good idea to look into it and get into it and understand it. So all of these things Jerome Powell, powers. We have these powers, that powers. We have this tool, we have that tool. Well, all of that kind of came to a screeching halt with some news that came out last week, where Mnuchin, Secretary of Treasury Mnuchin, says the decision to cut Fed's lending power, but sources say emergency programs can be revived. So it looks like there may be a pause in this somehow. So the powers may have to they're going to diminish for a bit. Treasury Secretary Steve Mnuchin's decision to allow several of the Fed's emergency lending programs to expire on December 31st will dramatically reduce the central bank's ability to backstop the financial system. So everything Jerome Powell just spoke about looks like it might go on hold. But people familiar with the decision say that Mnuchin, or a new Treasury Secretary from the Biden administration, could revive the emergency lending programs under a new agreement with the Fed. It's not an optimal arrangement from the Fed's standpoint, since it would likely require some new shock to the financial system to precipitate restarting the programs. I think there's some videos here. Let's see what these people have to say. Oh, darn. I was hoping it wouldn't play the commercial. All right, hang on, guys. Just hang on for a bit, get through these commercials. They're like 20 seconds or so. But I mean, it is interesting. Jerome Powell is always talking about the powers. They have the tools in the toolbox, and just like that, the plug gets pulled. So it's going to be interesting to see what happens after December 31st. So anyway, let's go ahead and see what this clip has to say.
Yeah, Sarah, the Federal Reserve astonishingly openly breaking and making known its displeasure with the Treasury Secretary's decision to not extend the emergency lending programs from the CARES Act. And I'll just read you the statement here. The Federal Reserve would prefer that the full suite of emergency facilities established during the coronavirus pandemic continue to serve their important role as a backstop for our still strained and vulnerable economy. So very explicit there, Sarah, about the Federal Reserve not agreeing with the decision of the Treasury Secretary. I have asked whether or not the Federal Reserve has to comply with giving this money back. I believe it does, but I have to say I am not sure. It's a very complicated process, but the Treasury Secretary asking for some $429 billion that have been set aside for the Fed to lend into the economy because of the pandemic to be given back to the Treasury, and then I believe that debt would be extinguished from the general account there.
Steve, a rare public disagreement between the two institutions. Thank you very much for that.
Okay, then I think there's one more clip. Let me get down to it.
Has to extend several key CARES Act lending programs that were funding emergency lending programs over at the Federal Reserve. They include the Main Street lending facility, the corporate bond purchases, as well as the municipal bond purchases. Those were the three key ones where most of the lending took place. The Federal Reserve, Fed Chair Jay Powell had made pretty clear in no uncertain terms that he wanted these programs extended beyond their expiration of December 31st. And Mnuchin saying no, he wants this money back. He has specifically requested that the Federal Reserve now send back some $420 billion that was available to the Fed for lending. Could have been trillions, but it didn't end up being very much. It was the very existence of the programs. Well, we, of course, first brought you this story about the split between Mnuchin and Powell on this issue earlier this week, and now a decision has been made in which Powell and Mnuchin, who have, I guess, worked pretty well together throughout most of this crisis, now going their separate ways on the issue of extending these emergency lending programs.
Steve, why? Why would the Treasury want to pull these important lifelines or potential lifelines as the virus crisis is getting worse? And while the economic crisis has gotten a lot better, is far from over, we still have millions of Americans unemployed and many small businesses and municipalities suffering.
So my understanding is that they believe that the markets have restored themselves, that the markets are trading well, especially the corporate bond market. I don't know what the rationale is on the Main Street lending facility, which is just now ramping up. And certainly you could make an argument many Main Street or mid-sized businesses, which are the target of these, need these funds. So that's unclear. On the muni market, it seems to be trading okay. On the other hand, you could argue there's a political reason, which is by giving this money back before a Biden administration takes over, it would deny them access to these funds and lending. Future lending would have to come from a much smaller pot of money, which is a $10 billion exchange stabilization fund that I know you know about, Sarah. That would be a much smaller pot of money that would leverage up to much less lending than otherwise would be available.
Okay, some interesting stuff there. So in a nutshell, looking back at all of this, the Western world does not look to get out of this anytime soon, per Jerome Powell, what he says with economies, viruses, things like that. And frankly, it seems to be going a bit backwards. Things are going a bit backwards. Sometimes as they say, one step forward, two steps back. We may be doing this two steps back right now in order to go forward. Eastern world, Asia, is coming out of it and going forward. So we have two different things going on in the two different hemispheres right now. And, I can't help but to think there is sort of like a growing shadow looming over the West as the two steps back come into play before that one step forward starts to work. But over the East, again, sun seems to be coming up over the horizon. Things are looking better. Things are going well. You can see it. You can feel it. And we've often brought up the topic of diversifying your assets, and to go a step further by even diversifying the location of your assets. As we talked about before, the area you're in, per the Rick Rule meter, is the area you're in look to be more stable, or does it look to be a bit more chaotic? So which way is that needle pointing? Because that should be one of your guides as to what you might want to do in the short term. Powell made it clear governments have the power to lay taxes on who they want, how they want. Powell has made it clear many times all this money being thrown around is a loan. It's a loan. And while we're all caught up in politics, the wheels of the wealth transfer, it's already been in motion. This is something we need to really watch and understand. We need to find vehicles to move with it. And as those wheels move, my question to you is, are your assets, your wealth, in a vehicle that can move and transfer your wealth with this reset? But don't take my word for it that a reset is on the way. You can take these people's words for it. And this was from George Gammon's YouTube channel.
It is obvious that we are in the midst of the most severe crisis the world has experienced since World War II. 75 years ago, countries and people came together to shape the post-war global order, which brought us decades of peace, increased global cooperation, and prosperity to hundreds of millions of people around the world. The COVID-19 crisis has shown us that our old systems are not fit anymore for the 21st century. It has laid bare the fundamental lack of social cohesion, fairness, inclusion, and equality. Now is the historical moment, the time, not only to fight severe virus, but to shape the system for the need for the post-corona era. In short, we need a great reset.
Now is the time to think what history would say about this crisis. And now is the time for all of us to define our own role. What is it that would make it so that history would look at this crisis as the great opportunity for reset?
The Great Reset is a welcome recognition that this human tragedy must be a wake-up call. It is imperative that we reimagine, rebuild, redesign, reinvigorate, and rebalance our world. Rebalancing investment, harnessing science and technology, and advancing the transition to net zero emissions, all elements of the Great Reset, are fundamental to building the future.
Okay, fundamental to building the future. The word used quite a bit was rebalance. That means some of us may have things taken away by the state, while others of us perhaps become wards of the state in order to receive benefits from the state. from those the state has taken away from. Look no further than that article from Deutsche Bank where take away money from guys working at home, right? These are what's in the mind. This is what is in the minds of people that have some power. So rebalance to me anyway. That's what the definition is. Now I could be wrong. I could be wrong. How should rebalance be defined? I'll leave that up to you. So let me know in the comment section what that might mean to you. And so again, I'm going to have to play that clip from Dave Drummond again because he sums it up better than anyone else really. Here we go. Dave Drummond from Georgetown Trust.
I believe, like many people, gold and silver are stores of wealth. They could also be an investment instrument, but if you don't look at them like an investment instrument, if you look at them as stores of wealth, you'll note that they hold them very well. And then where the stores of wealth typically been put, they've been put in areas where there's low risk or smaller risk of those countries being invaded and the gold being taken. So do I think it's wise? Yes, I think it's wise to have, some gold and silver within hands reach, some gold and silver within cars reach, and then some gold and silver within no one's reach, right? With that, I believe that there are places then to store your gold and silver, looking for places like, you guys have that capability. Look for those companies that have that ability and use it. Same type of thing, right? Redundancy.
All right. So there you go. I mean, that's quite a bit. I've kind of held you folks here for quite a bit, but I think these were some pretty important things. I don't really like using the word reset. But the thing is, it's not my word. These are words coming from the head of the IMF. These are words coming from World Economic Council. I think that's where it's from. But these aren't my words. They're not even our words. These are the words coming from people at the top. So if they're saying these things, take heed. Take heed. This is what they plan to do. And again, if you're wondering what to do, I would say, and again, this isn't financial advice. Otherwise, if you're looking for, what you should do, you need to find that store of wealth, that vehicle that can get you from here to there, whatever the plans may be for us, whatever the powers that be are planning for us. We have to be able to move with it. We don't want to get left behind. We don't want to become obsolete. We want to have things that can move along with it. And for those things, again, this is why I look at things like silver and gold to be that store of wealth and carry you through from here to there. It's different for everyone. Everyone has a different set of circumstances. You may want to keep it with you. Some people, they may feel the need to keep it offshore in a different jurisdiction, to keep it out of their home country for whatever reasons they foresee the government doing, their home government doing. But, there are various reasons, different situations for people. So you need to do what's best for you. You just take in as much information as you can, sort through it, sift through it. And again, if you're on the fence, just go through the comments here. What guys are saying right now is more important than anything I could ever say. These are, again, other people who are doing the things they feel necessary, and maybe it may be the same thing for you as well. So again, with that, I just want to look through a few comments and then I'll be heading out. I appreciate you guys all being here. Let's see if there's anything I could add to what you folks have said, because you folks have a great conversation going on there. Let's see. Hang on. Let me just look through if there's anything here. Interesting question. Would it be unpatriotic to retire outside of the U.S.? I'll just speak from my experience. I'm outside of the U.S. I feel I'm still very patriotic towards the U.S., but I also do realize that there are things that look to be coming down the road that they are going to change. Things are definitely going to change. It's a different decision for everyone. I think just because a person leaves their home country and becomes an expat somewhere else, home is still home. Home will always have a special place in everyone's heart. Home will always be home. So I don't think it makes anyone less so-called patriotic because they've moved. Home is home. So with that, I think I'll be wrapping it up. Just again, as always, be a blessing, not a burden. We see these things that are coming down the road. Take care of yourself, your families. Do the things you need to do for yourself, your friends, and just try and help people as much as you can, because when these things happen, people are going to need help. So position yourself for your family, maybe even some of your friends. Position yourself to be able to withstand this whole wealth transfer and all of these things that people have, or that are thinking of changing the world too. Not saying everything is bad or anything like that. I'm saying that when these things happen, there are going to be a lot of opportunities as well. So that's another reason to position yourself there. Anyway, I think I spoke enough here. Happy Thanksgiving for you folks in the U.S. Yes, American Rebel. There you go. Happy Thanksgiving, everyone. Keep the faith, no matter where you are, who you are, whatever situation you're in. Keep the faith. You have to keep it. So with that, I'll end by saying, just saddle up for whatever's coming up ahead, and silver up as well. Take care of each other, and I'll see you all next week. Take care.